Hey everybody, Chuck Barone here. It is Friday, December the 30th, 2022. We call it New Year's Eve. Big night here in Vegas. They said that they're going to have 400,000 people on the strip tomorrow night partying for New Year's Eve. It's going to be bananas. Vegas goes crazy this time of year. Our last little thing for the year, our last blog for 2022, wrapping this year up. What a crazy year it was. Am I right, guys? Wow, it was just the craziest year ever. Anyway, as always, we just want to welcome you guys to the show. Thank you for your support. You guys mean the world to us. We appreciate you. Stocks today, well, nothing day in the market. It just, stocks were down very small across the board. The market ending, rightfully I think, ending the year with a whimper, just nothing happening. There's really, this market is like being day-to-day news driven, so it's just, there's no real direction I don't think right now, but things change quick, don't they? Market stocks ending their worst year since 2008. So we're back to financial crisis era stock markets. Not a great year. Hopefully 2023 won't turn out to be like 2009 was as opposed to 2008. You know, at the end of 2008, we were glad that year was over too. We kind of were hoping for the best for 2009. It didn't quite work out. Hopefully 23 will be better for us than that was. Bond market today, well, yields up again, small. You got the 10-year sitting at 3.88%, up 4 basis points today, a very small day. The 2-year, by contrast, sitting at 4.43%, up 6 basis points today. So the inversion is still there. That's always an indicator of a recession to come. So we know, we're going to have some rough seas coming up in 2023. As I was saying in the podcast the other day, I just don't think it's going to be end of the world stuff like a lot of guys are predicting. But then again, I'm just one knucklehead. What do I know? Today, the dollar down, actually not a good number for the dollar now, 103.49 on its way down. Was holding plus 104 for a while, peaking at 114 back, I think, August. So the dollar coming back down to earth. As a result, today you get metals up only small though. I think we'll end up still rallying next week depending on this new year starts. Gold today up $8.70 at $1,824 per ounce. Silver up 8 cents, $23.96 per ounce. Both of these metals, gold and silver, looking really good right now. I think silver will be above 24 and stay there very, very soon. Gold above 1,800, building support there. Now it's time for the run to 1,900, then 2,000. I like the way metals are looking right now. Oil up today, up over $2, $2.20, $80.43 for a barrel of West Texas Intermediate. Oil prices creeping back up. Now we're in that 80 to 85. So let's see how it does in this trough this time around. Natural gas today down 14 cents or 2.87%, $4.43 for a million BTUs. Gas prices coming down. I don't know if it's demand. I don't know if it's supply. I don't know what the heck's going on with natural gas. Be very cautious if you're anywhere near that stuff. Bitcoin today, basically a flat day, for 16,600. No news for Bitcoin. News you guys need to hear, not a lot going on, last day of the year, but some interesting stuff coming along. Hedge funds, our buddies, the hedge fund, private equity guys, having their worst year since 2008, just like the stock market. Go figure, right? Hedge funds not giving their big returns that their investors are used to, having to take some cuts and bonuses. They're all weeping on Wall Street, those poor guys. Anyway, I thought that was interesting. It's been a while since hedge funds have taken a hit like they have this year. Jobs, though, in the U.S. still stay strong, even though employment numbers were up pretty small, only up 9,000, nothing spectacular, still 220 and change. I think that the jobs market's And the reason the Fed's going to stay strong on rates right now, until we see jobs get weaker, until we see jobs coming down where, unemployment is rising, the Fed's going to stay strong with rates. That gives them cover to stay strong with rates. As we've been saying to you guys, and you guys all know by now if you've been paying attention, it's not raising rates that stops inflation. It's not raising rates that brings down the rate of inflation. It's the recession that raising rates causes, that smashes up demand, slows demand, or eliminates it, like in real estate. And then that is where you get deflation and prices coming down. It's already happening in real estate pretty dramatically. I think we're down almost $60,000 from our peak here in Las Vegas. Still plenty of room to go on the downside, I believe. It's happening with other things too. Used cars were actually going up in value, which is just bananas. Now coming back down to earth too. Actually, they're a big part of the reason inflation numbers are coming down is used cars crashing. They were a big part of it going up too, so it's only right. Crazy year this year of 2022 was. I say goodbye and good riddance to 2022. Remember back this year, we started the year, at least in real estate, everybody thought this was going to be a good year for real estate. We were coming out of 22 or 21. It was a great year in 21. And we thought, okay, this year's just going to be as good or even better. Prices were high, but rates were still low. Payments were manageable. People wanted to buy houses, even though they were getting a little bit choppy as far as the prices were going. Could only charge so much, right? This isn't California, but we thought we would have a good year. We thought the economy would have a good year, and look what happened. Now don't forget too, the beginning of the year last year, we were already hearing the words transitory, and we knew there was some inflation creeping in, and everybody was doing their best to say there was no inflation. So that started the year. Then we had the first and the second quarter coming in with negative GDP growth, which is the classic definition of a recession. So now you got everybody talking recession, which really just didn't happen. Now the third quarter positive, pretty strongly positive GDP growth. Fourth quarter, Atlanta Fed tracker saying going to come in around 3%. We're going to have positive GDP growth here in the United States for the year. Hard to call that a recession. Now 2023 coming up, well, we'll see, if this inverted yield curve and all the indicators that are pointing to a recession actually happen in 2023. I think we probably will get some type of a recession. You have, with all of the factors, when you weigh them all in, people losing money in the stock market, in their retirement accounts, people's houses going down in value, they're losing equity in their houses. There's not a lot of happy financial news for the middle class, for us, the schmuckatellis here, the working guy, right? So people are going to be feeling not as wealthy, and that's going to make them less inclined to spend. Hopefully they're paying attention to what we've been saying about spending is okay, as long as you're thoughtful about the way you do it, right? Buy what you need to buy. Just be careful of the impulsive stuff. That's the stuff that money somehow gets wasted, right? Guys, it's been a pleasure doing this show for you guys since June the 15th, our initial show, June the 15th. So we've been going a little over 6 months. It's been a fascinating journey. I've learned a lot. We have a lot of big changes coming up for you guys in 2023. Trying to make the show a little more interesting, trying to keep you guys where it's going to build on how you guys can build real wealth. I've been very cautious this year. I had a lot of warnings about being careful about how you talk about finance, especially the stock market, individual stocks and individual investments. I'm not a licensed stockbroker or financial advisor, whatever the title is these days. So I have to be very cautious about how I recommend stuff to you. But what I'm going to do is do some stuff that'll help you guys, help you and be in the right direction. Like some of the sectors we've been talking about, utilities and preferreds and consumer non-durables that pay fat dividends and defense stocks and healthcare stocks. We're going to, on our website next year, we're going to have the top 20 or 25 in each of these sectors, so you can see the stocks that are doing well in these individual sectors. You can get in there and do your own little bit of homework to find out if any of these are right for your portfolio. Also, I'm going to create a fictional portfolio. It's going to be just something very simple. Say let's start with $50,000. I'm going to invest this $50,000 following the system I use in the S&P 500 index fund, and let's see if using my system we can beat the market this year. I think we will. So we have a whole bunch of interesting stuff. We got a backdrop we're going to put in so it's not just white and behind me anymore, and we're trying to do stuff to make the show a little more interesting, a little better for you guys. As always, though, we're going to tell you the truth, the way I see it. I'm going to give it to you fair and simple, the bottom line of everything, not a lot of fluff and a lot of my own personal opinions in this stuff, guys. Numbers are numbers, and they always lead to a reasonable conclusion. There's no bias, doesn't work with numbers. And I've always tried to play it that way with you guys, sometimes to the detriment of the show. People don't like your opinion and they tend to unsubscribe or stop watching the videos. I don't think that, I thought that maybe people were ready to hear what I thought was the truth and use it accordingly to help themselves in their day-to-day investing, in their day-to-day building of wealth. But I guess it's not the way it works in 2022, 2023. But anyway, it's just been an absolute pleasure doing this show, trying to be creative and think of something interesting to talk about with you guys every day. I think we've had a lot of successes on the show. If you have been following our advice about trying to save, if possible, 10% of your income, you probably have a pretty nice little nest egg right now starting up. If you've been investing it conservatively, like we've been saying over and over, invest defensively, your portfolio is probably still looking okay. If you've been doing what we suggested and not adding on any new debt, and at the same time doing what you can to chip away on your existing debt, well, your balance sheet's probably looking a little bit better too. And we also been telling you guys, to be a little more thoughtful the way you spend your money. Try to be less impulsive and try not to waste money. It's good to hold tight right now. If you've been doing that, you're doing well too. So I think the advice we've been giving you guys is valid. I think our real estate has been spot on. You guys have been months ahead of the curve. We've been telling you what's going to happen, and it's following suit. A lot of the things I've been talking about on this show, now we read and seeing these things coming up in the mainstream media. It's kind of cool to be a little ahead of the curve, and we're going to try to keep you guys that way too. Also adding in some new ways that we can be a little more useful to you guys in how to invest your money, how to take care of your savings that you've started to accumulate, and to help you guys build real wealth. Anyway, guys, that's it for the day. That's it for 2022. Have the very merriest, happiest, funnest, most exciting New Year's ever. If you're coming here to Vegas, be careful though, man. It's going to be bananas. I guess they're going to be launching fireworks off of 33 separate rooftops tomorrow night. So it's just going to be a huge, huge show. If you're out in Vegas, be careful. Don't blow too much money at the tables. Everywhere else, be careful, be safe. It's amateur night on New Year's. Everybody out drinking on New Year's Eve. So be very, very careful. But have a great time, a happy, happy New Year's Eve. Watch some college football playoffs. We got NFL on Sunday and New Year's Day, and family and friends, and a nice day to celebrate a fresh year, a fresh start for the year. And then, of course, on Monday night, and we won't be here on Monday, the markets are closed. On Monday night, you'll know I'll be sitting right in front of my TV watching my beloved Bills take on the Bengals in a huge monster game with playoff implications. We love you guys. Happy New Year. We'll see you guys next week on Tuesday, January the 3rd. We'll start the new show up for the new year. We appreciate your support as always. Until we talk again at that time, guys, Happy New Year, and we'll talk then. Thanks.